Hey, it's Jonathan Gurney. Today is Friday. It is April 23rd, 2021. Friendly reminder, this is not advice. This is just keeping my clients aware, informational purposes only, and education. I'm just keeping my clients aware of what is going on, what I'm seeing. Obviously, Thursday, there was some big news on some potential tax changes. To be honest with you, this should not concern you. This has been proposed for a long time. Okay. So that honestly was a good opportunity to probably buy. I'm shocked that it did not rebound Thursday right after that. I mean, we had a nice sell off on Thursday, and today, Friday, is rebounding very, very nicely. The S&P 500 right now is up 1.15%. You're like, but Jonathan, I thought we said we were in cash. Yes, it's unfortunate. Like I said, it's kind of a risk reward thing where we said if 41.45 breaks, which this was the trend, 41 that was going up very, very nice. I'm going to switch to another chart real quick here, just so you can see it a different way. And then I think this will help you visualize. Again, everything is risk reward. I'm never going to time a top or a bottom, but it is all risk reward. So here was the trend. I mean, you got to understand this is an 8% move in a very short amount of time. Okay. So I'm being a realist saying, hey, we're going to see some volatility. Now on this red day, it was ugly. That was Thursday, yesterday. That was basically driven by one political news, one political headline that basically said, the wealthy capital gains will be 43%. Now, everybody's like, oh, shoot, that's going to kill everybody. That's going to kill people that make $1 million plus. And it's proposed. And the joke around us investment advisors was like, okay, the congressmen are all day traders. So you think they're going to pass that? So take a breather. Take politics out of it. To be honest with you, I'm shocked that what we're getting today did not happen yesterday. So now we're getting the freak out. A lot of people missed this rally. I tried to hang on as long as possible. And again, you got to understand, like, I have not done well. So I am not going to be greedy after a move like this. Okay. So I'm basically saying, listen, the risk reward, even after this, it's good price action. We regained the 41.45 that I said, hey, last week I said, if we go below that, I'm out. That happened. Now, I wish in hindsight this morning that I would have bought right when it got back above 41.45. But again, this could still get ugly. And so it's a risk reward thing to say, listen, I think your upside potential is 2 to 3%. I think your downside is much larger. Again, there's no real concerns at this time, but I want to sell into strength, not weakness. I don't want to have to sell when you have the 3-4% down day, which will probably happen. A lot of people assume that day was going to be yesterday. I don't think that was going to be the reasoning for the downturn. Again, everybody knows the proposed changes are probably going to have some tax increases on the wealthy. That's usually what happens under a presidency that is Democrat. That's not being political. It's just factual. Okay, so that should not surprise anybody. That I'm shocked the market reacted that much on Thursday and thought it would have rebounded faster on Thursday. So in short, we got out around 41.45. Price action is pretty good. So I want to show you what I am kind of looking at and saying, here's the risk reward. And this is showing weekly candles. So each one of these is a week. So this goes back to May 2020. And it kind of shows you at a lot of tops, what you see is, and I'm not calling a top, but I'm just saying risk reward here is not great. There are opportunities, and I'm watching those. But look, you had a green candle, a little bit of a freak out, and then a quick buy. Because again, a lot of people miss this entire rally. They get in, and it's the worst possible time. Then it rallied hard again later, but same thing. Green candle, freak out, go a little bit higher. I'm not saying this is happening. Relax. I'm just showing it's a similar pattern. You have the big green candle, freak out, all-time highs, and it really falls apart then. Same thing here. Big green candle. Freak out. New all-time highs. Then we kind of trend down. Could this be the same thing where you have big green candle, freak out Thursday, and new all-time highs? You can see it's about there. So you can see, like, price action is good. So don't freak out about this. This is it's good price action. I mean, things are very, very strong, but we are in earnings season. So there is going to be big swings. Okay. So I'm not concerned. Like, if I'm bullish right now, I'm not concerned about getting better levels shortly. Okay. So again, what I'm basically saying here is maybe 2 to 3% higher. Not sure that's great risk reward. I feel like I'm batting my head against a wall trying to get 2 to 3% versus just waiting for a 5, 6, 7% dip, which happens every year. If you're patient, that's kind of what I'm saying is I think we just need a little bit of a reset, just like what we had here, just like we'll probably have soon. We need another one of these consolidation periods that are frustrating and then go higher. We had a little bit one here, and we had a nice rally. And could this continue more? Yes. If I'm showing you the area that I think has the most opportunity, to be honest, it's small caps. And we've talked about this to say, listen, this has been consolidating for a couple months. This is where I had a lot of our money and just gave up once it was right around here and just saying, hey, it fell apart. I'm like, got to get out. I think this is going to fall apart. Now, small caps have recently been the strongest. That's a really nice day today. Obviously, I wish I were in, but the day before that was ugly. Okay. So I think the strength still is in the comeback trade, but I'm just really concerned about the risk reward. The VIX did what it needed to do on today. It's starting this little hockey stick up, which concerns me. This might be the extent of it. Again, it's going in the right direction down. The fear index is going down, which is good. Volatility is going down. But what I keep saying is watch 20. We keep testing that, and it's been a wall. I'm not sure we're going to hold the next time it does that. So price action is good. I felt like I went as long as I possibly could. And yes, I wish in hindsight that I would have bought yesterday on the big dip and this morning. Just did not love the risk reward. So I'm questioning whether this is more of a squeeze, saying people are shorting, pushing the market up a little bit higher. Kind of feels like that, but there are opportunities. I mean, momentum growth is still down huge. I mean, I was in some of these names, got hit hard, but I mean, 159 to still 123. So there are still opportunities, a lot of areas that still have opportunity. The FANG names could really get going into earnings season. This is a nice consolidation period. Could it get going again? Maybe. So there are opportunities, okay? That's what I'm watching. So don't feel like I'm waiting on a big dip, so I'm never going to get invested. I might get in for a few days and get out. Like if we see a 3% down day, you're probably going to get a little bit of a uptick, maybe 50 bips or 1%, and then it might sell off again. That's kind of where I think we're headed into that environment. But right now, we're above all the averages that we need to be. I still think IWM has the most opportunity, but it is still a risky trade. I mean, despite the last couple months, it lagging in performance by quite a bit. Because again, it's gone sideways, and the other indexes like SPX are near all-time highs and near overbought. Now, I'll be honest with you, that dip that we saw Thursday really helped RSI, the relative strength index, meaning it got it out of overbought and people came in hard. Again, it's psychological. A lot of times when you see this, you get a couple day dip, and the people that completely miss this entire thing say, well, it's time to get in. Again, this could go a little bit higher because of that. I just don't love the risk reward here. So in short, again, every year sees one 10% dip. Last year we saw many 10% dips. So I'm thinking right around here, right around this period. Again, nobody has a crystal ball. It's an odds game. when the indexes are near overbought, I'm going to be a little bit cautious here, okay? Especially since I haven't been trading very well. I don't want to have a ton of risk on when I don't believe the risk reward is great here. I think the best risk reward is in small caps and momentum growth. And to be honest with you, I don't know if momentum growth is really going to hit all-time highs for a long, long time. It might need another plunge before we get there. So just want to be honest with you to say, that's why in your apps you're seeing no movement. It's because it's in 100% cash, and in cash we still earn a little bit of interest in the account. So it might take a week, it might take a month. I'm going to be very patient. I'll get in and out of stuff, but it's going to be probably for a short period. Again, if we see a 3% dip quick and we test a 20-day moving average, which I'll be honest, I thought that this might have led to a 20-day touch, I might buy for a quick bounce because, like, look, a lot of times you get bounces off these key institutional bought areas. So you might play it for a scalp, be realistic. So again, you have periods of consolidation, nice rally, consolidation, nice rally, really nice, really quick rally. Do we have a little bit higher? You can see kind of why I'm like, this is not great risk reward, especially if I go back to this chart near all-time highs. This is the chart I wanted to show, sorry. Back to this one. That's fine. This does exactly what I needed to show anyway. So we're getting a little cup here, but we are extended. So again, I know it's frustrating. I know I have a lot of work to do this year. But at the same time, I got to be realistic. I'm not in love with risk reward here. A lot of times when people get greedy at all-time high, again, it's not because we're at all-time highs. It is because we're seeing a lot of overbought levels. But there are still stocks that have opportunity. So the debate is whether I want to put some there or just wait for a bigger dip. That will happen. It will happen if you're patient. What I don't want to happen is you just see 2 to 3% higher and you be like, add now, because that's the worst thing you can possibly do. So I'm viewing this as 2-3% higher short term versus 7-8% down. That's kind of what I'm looking at. Just not loving the upside here. I love the price action, and yes, I'm a little frustrated that it rallied today. But at the same time, it has done everything it has needed to keep the bulls in place. But we'll see. I'm still very interested in financials, which is usually not the case for me, but really nice comeback. The reason why I like financials is because I think rates are going to continue to increase. XLY, consumer discretionary, nice days for this as well. It's been in a bull market. Eventually this will get tested. It's just a matter of time. But again, the key to investing is being greedy when other people are freaking out and being a little cautious and selling into strength. Once we got out of this right here, once we got out of this trend, this is honestly what I think will happen in the S&P 500, where we get this little test here, a new high, and kind of a little bit fall apart. So this is consumer discretionary, but once it loses the trend, I'm a little bit like, That's why I got out of the areas that I was in. I got some work to do, candidly, but at the same time, we got to be realistic. This is where I'm seeing very similar price action and a lot of big dips. I got to stick to my guns on this one and just be patient. Again, I'm never going to time the top. I'm notorious for getting out 2 days early, and that very well could happen here. So I'm okay with it. I'm frustrated, as any real trader is going to be when they miss an opportunity where they're watching closely and intently. So hang in there. We'll be okay. But if you're wondering why in your app it's not showing any changes, it's because it's in cash. There's no investments in there at this time. So hang in there. I had a lot of questions like, hey, the market's moving, but we're not seeing any change. It's because you're in cash. There's nothing invested. So Thanks again, you guys. Have a great weekend. Hopefully it warms up next week in Ohio. If you don't live in Ohio, you're lucky. Thank you. See ya.